June 22nd, and this, of course, is the video log that takes 30,000 to a million. Today is going to be just a major update on the account and what's been happening. And I also want to talk about some of the difference of opinion of the younger crowd versus older crowd in investing. And there are many articles popping up about Robinhood diets, like you and I probably. I don't know if you're using Robinhood or not, but and how they or meaning us have been buying up basically everything with a letter in it, more or less, the entire stock market basically, because everything quote unquote goes up. So I like to listen to a lot of podcasts, financial media, etc. And the older, more established investors are definitely on the other side of the trade here with the kind of the more younger, more enthusiastic crowd. So, and I have some opinions that I want to share. So we'll talk about that. So here's the account. I'm sitting at near an all-time high. I think I hit 93,000 for a little bit, but it's good enough. These charts get pretty impressive though. Okay, so look at this. The 1 week chart is just 0.5%, but the 1 month chart, now we're talking 7%. And the 1 year chart is also really impressive at 30. But look at this. Look at the 3 month chart from the lows, right? Look at this. 91%. 91%. So this account is going up $44,000 over the last 3 months. I definitely don't think the S&P is beating me on this performance here. Let me click the S&P. SPY, I use the ETF SPY to kind of track it. So on a daily basis, I'm beating the SPY. On a weekly, I'm also beating by 1.5%. The 1 month chart, I'm beating by about 4%. In a 3 month chart, you can see the SPY is up, or the S&P 500 is up about 38%. Whereas my account is up 90, but of course it got crushed a lot harder as well on the downfall. So I'm scoring all-time new highs, but the S&P 500 isn't yet. You can see here the all-time high is somewhere around 338 on the SPY, and right now it's at 312. So outpacing the market. The big contributor to that is probably Apple, and the fact that I went really aggressive on margin, trying to bounce off of the bottom, and I had maybe $40,000-$50,000 on margin in debt, and that's money that I would have to pay interest on month after month. Okay, so it's a pretty big deal, and it's a pretty risky bet, and it paid off. So now I've bounced up, and it's bounced a lot higher than I actually originally thought. But I was able to finally deleverage the account, and I want to show you, I'm excited to announce that I'm completely margin free. Not only that, but I actually have $2,048 cash, all right, in the bank, ready to buy stocks, sell puts, or any of that crazy stuff that Robinhood allows me to do. And I'm sitting on a pretty near all-time high. I'm very excited about that. I think here's what the all-time high was, 93,017, and it was just for a brief moment. So on June 16th, right at the open of the market, then it quickly dropped and corrected. Other than that, this would be the highest point this account has been. Certainly the highest point it's closed in, so very excited about it. Okay, let's go through the positions real quick. As always, you can always pause the browser whenever you want to and read all the information you'll need here. This is the name of the option that I hold. This is the strike price and the expiration date and the number of contracts and whether they're buys or sells. So from these symbols here, you can deduct all the information you need about my position. So I want to quickly go through them. Usually these numbers are green because as time goes on, the value of the options decreases because options are a depreciating asset. So that's why these numbers are usually green. Now, there are many of them that expired this last Friday, and I've already re-rolled a couple of them, namely RSX, which is the Russian market right here. You can see I re-rolled it in the $22.5 call. I saw the call against my position, and what else did I do? I think I saw the Cameco $11 call, and that's about it. I still have a lot of Cameco calls that I can sell, because if you remember, let me just jump straight to Cameco here. I'll go through the rest of the positions in a little bit. If you remember, I had calls sold against all my positions, all 1,500 shares, but now I only have 1,300 shares left and only 9 options. One of them, which is put sell, so that leaves me with 500 shares that I actually own straight out Cameco without having the options sold against them. So if Cameco goes up big in the next few days, maybe even tomorrow, I'll be able to sell a call and be very merry and happy about that, because I'll get it at a better price and I'll make sure that I make more money out of it. So that's the name of the game, it's money. Okay, so these are all the positions. You can pause any moment. And I have EXK appreciating $20 today. Apple a whopping $936. So Apple scoring an all-time high as well. And it's a big contributor to my account. Scoring all-time highs too. I mean, it's definitely outpaced the market, and it's the market alpha, really. I mean, it's got a double A in its symbol and its ticker symbol. It's the biggest market cap company in the U.S. markets, and so it's definitely the alpha dog, and it's got better and stronger financials than anybody else, and they keep innovating. Recently, they actually announced that they're going to start making their own chips for some of their hardware pieces, like I think the Mac. So they're ditching Intel for that deal. It's going to save them some money if they do everything in-house, and they'll probably have better quality control and more cohesion with the rest of the product. So it might improve the quality of the product. So these guys keep innovating. I mean, their phones are probably going to be the fastest ones ever again, and they haven't really dropped out of the technology race one bit. They haven't innovated that much as far as new products goes. I mean, yes, the AirPods were a really nice addition, and the Apple Watch was okay, but other than those are years old now, and a new blockbuster product hasn't really come out outside of the fact that they're monetizing their users through Apple Plus and Apple Music and all these other digital stream kind of services, which I really approve of. I think it's really great for the company. A big position that I like to hold and accumulate is O, and it was about flat today. Overall, I'm up about 7% or $500 on this position, but it's not really about the principal appreciation with this position. It's more about the dividend. So I'm going to be getting paid about $25 per month from this position, and this is the only thing I'm going to be setting to re-roll and repurchase this position with the dividend, so it can exponentially grow. Okay, it's called DRIP. Basically, what it does is it reinvests the dividend. Just exactly what I just said. DRIP program. DRIP. The RIP thing is direct reinvestment program or something. I forget what it stands for. Something like that. Okay, so Apple had the developer press conference. I think a lot of good things were said there, including the hardware piece news, and I think they're kind of liberalizing their markets a little bit. But their Apple Store developer markets, I'm not exactly sure. I haven't read the details, but it really doesn't matter too much at this point. So let's see. RSX up a little bit, so the call today. Wheat and precious metals up $59, that's nice. And then I have SIL up 62, so silver is really making a move. Uranium is very flat. Here comes Cameco, and then emerging markets. I don't really care where it goes, up or down, or stays sideways. I have a call sold against all the shares. And then at ET, I have 2 calls expired, so it forced me to sell some at $7. Now I have the other $300, I'm sorry, 300 shares in option form over here, but the call, the strike price is at 10 and only one of them is a 7. So I'm gonna end up, if the price stays at about the same level, I'm gonna end up with about 200 shares. Okay, I think that's about it for the account. Visa went up 62, which is cool. Visa's been a really nice hold, actually. I really think that these guys are premium, and I think it's a premium company. Definitely doing well. It's tracking the S&P 500 quite exactly, but I think it's performing a little bit better. And this is a beautiful chart. I mean, you definitely want to see something like that when you're an investor. So far, I'm up 13% on Visa. And these gains might not last. I've ticked over to the other day. That's why you don't see the chart over here. So let's just put it on the beautiful side of the year chart or the all-time chart. Look at this dip. It's crazy, isn't it? It's crazy. All the way down to 48,000 and now all the way up to 92.7. This is what happens. So here, I'll tell you the difference, right? So I started taking this account about August 28th, 2018. And this is the first knife I tried to catch on the Christmas of 2018, if you guys remember that drop. So I cut the knife pretty successfully. Only went down my account only went down about $3,000 worth of value. And then I was able to leverage up and really cut the bounce. And so I've been cruising upwards to sideways ever since. And then I try to catch over here on the second tier, right? My account dropped by about $6,000 and I really tried to catch it. So I started levering up. Boom, went the other way. So I lost, $40,000 in short order. And then of course a rebound back because I kept the leverage and I actually lost real money though. I had to buy back put options at a loss. It was just ugly. But fortunately, I held in for at least part of the position, which allowed me to skyrocket back up. If I had caught this knife successfully, I would have been sitting at not 92,000, but like 150,000 by now. It would have made my work getting to $1 million a lot easier. But this is no easy task. It's a tall order. Okay, so who's right? The old investors, the Druckenmillers and Rosensteins of the world that are thinking this has got nowhere to go. Are they right? Do they think that reality is gravity and markets will roll back over just like in 2008, 2009, just like in 2001, 2002? After initial recovery, just like this one, markets tend to roll over and try to meet their actual lows in the year ahead. And we don't really know if that's going to happen. Now, the young investor think not, full steam ahead. Old investor, by old I mean like more established train of thought, think that there's going to be a dip no matter what the Federal Reserve does, and it's not different this time. We're still going to meet new lows, even if the Fed's buying everything in the kitchen sink behind this market. But I think that's the difference. So I'm probably going to side a little bit more with the younger train of thought, which is this time is different, which are some words that you'd never want to say. Although I am bearish on the economy just like everybody else in the established world, I don't think that there's going to be that much downside. There might be like a 20-30% max correction, but I don't see it further than that. And it's for that reason. I mean, when we had that 7% drop in the markets, the Federal Reserve immediately came out and reiterated their commitment to start buying stuff up, going into the market and actually manipulating the market. And I mean, that's crazy stuff. It's out in the open. At one point in the past, if an official like that came out and said they were manipulating the market, I mean, that'd be a big deal, right? That'd be crazy. It'd be like death of capitalism, you know, the guys would be hung, but not, maybe not in a literal sense. But nowadays, officials are coming in and saying, hey, yeah, we're printing up money and everything, and forget restraint and responsibility and everything like that. We got your back. Like, this market, we're not going to let this market go down in nominal terms. And that's the thing, right? They do have the power to do that. So many people don't think so because maybe there's not, maybe you know, it gets too out of hand or too out of control, but there's nothing really stopping them from doing that. All that matters really, as far as political capital, is that the nominal value of the market stays at a decent level or goes up a little bit. And in fact, they kind of said on one of their press conferences that if they'll basically modulate the market, right? If it goes up too hot, they're forced to sell some security instead of buy securities. If the market starts tanking, they're gonna buy more. So they're admitting that they're manipulating the market, and they've decided to keep it within a certain range, which actually, all the way back from 2016, I've talked about this many times before, was my theory that the markets are gonna go sideways to slightly up over the next 10 years in real terms. Real terms means inflation. And in nominal terms, I don't know where they're going to go, but I'm guessing they're going to go very high. Very high. So I'm positioning myself for that scenario. Are there going to be bumps along the way? Of course. And they're going to be knives to catch, which I caught one really well, and then I got cut on the other one. And the knives get bigger and bigger as my account grows. But you got to take a few risks if you want to make it all the way. I mean, it's not easy. Not everybody is a millionaire, and there's a reason for that. Especially doing it by investing in trading. Okay, this is very, very, very rare. And I wish and hope to be one of those, even if I'm not as bright and smart. I would like to think that I have an edge and some strategies and principles that I can stick to take me there. You know, hopefully many of you guys are doing the same, because what else is there, right? Just make some money. But even if you fall short of the goal, if you're making money in the markets, I mean, you're doing well. So those are my thoughts on the current debate that's going on out there in the news media. And one thing I found funny too is that what's differentiating, you know, CNBC or Yahoo Finance or all these more established channels from a dude or a girl, whatever, in their, you know, studio or office filming something on YouTube. In fact, some of these broadcasts that I've seen look even a lot less professional than some of these YouTubers. Not me, okay? I'm just in my studio doing my thing, but you know, some people make it really professional, and they're actually the ones that are looking more credible. Like, personally, I don't really care about being that credible, because the major goal of my videos is to keep a log and to keep myself accountable and honest about my progress. And by publicizing it, I'm keeping not only a log, a video log of what's been happening and my process there, but also, you know, it's a way to kind of keep myself responsible and committed to the goal. So I did this to help me out from a selfish perspective. And if someone wants to, you know, listen and join for the ride, I'm really happy about that, and we can discuss things, we can start discussions. But what really struck me anyway, to go back on topic before I broke on this tangent, is these guys, the established media, actually looks less professional and less established, less professional and less credible than the people that you would see on YouTube talking about the markets. So there's kind of a reversal here that's going on, because one thing that kept the credibility from the established channels was the fact that they're in a studio that's designed for, you know, news media. They have the screens, right? They're walking around in these like glass, or plastic or glass, whatever decor over there with the microphone setups and the clean backgrounds and everything else, and the makeup on their faces. And but now you look at them from this shelter in place productions, and they're just, you know, in a shirt somewhere in a crappy camera, or they're using the iPhone or something at home, FaceTiming the news over to, you know, the network. And I mean, that's cool. I'm not a hater. Like, that's fine. But it's just funny how like tables have flipped, and now these networks don't even get that many concurrent viewers. Where a YouTuber going live, if they're, especially if they're kind of popular, you know, or their video drops, it will get like hundreds of thousands of views. So it's just very interesting to watch this trend develop. It's I hate this word, but I'm gonna use it. But democratization, right, of opinion and media, and it's really letting like the real talent swim up top, and you're no longer beholden to the person who chooses who you're gonna listen to, right? You can go straight to the source. So I think that trend will continue, and for that reason, I'm buying Google. No, I'm not buying Google, but I should. I think it's a great company, but I just don't. I think I want companies enough. I got Apple that encompasses all that I need from many, many different facets, like technology, social, like streaming services. I got, you know, phones, whatever, communication. You know, you got innovation. You got they've got their finger in healthcare now, right? They also are very correlated with the U.S. markets. They also have international production, and they serve many markets around the world, so it's a global country. I mean, they do so much to diversify your account. I mean, it's just crazy, just one company, right? So that's probably one of the very few U.S. companies that I actually own, and it's the only technology company I think I own, but it's a large portion because it does so much for an account, for a portfolio, right? Okay, so that's what I've chosen. It's a careful choice. It's not like some random pick, okay? You want to think through what your goal is, what you're trying to do, and then pick the companies or ETFs and funds that fit that mold. As always, this isn't any investment advice. This is just opinion, and I'm blabbering around, and I'm just logging my progress here on the account. Um, if markets are a dangerous place, you could lose all your money. I wouldn't even recommend entering into the market, especially if you're new, unless you're willing to lose 100% of what you're putting in there for the sake of learning, okay, how things work. Because you're going to make a lot of mistakes in the way. I'm certainly still making mistakes, and I've been in this for like 15 years. Been doing this. So, you know, I'm not a professional. You should consult a professional if you're confused about any of this. And even if you're not confused, before making any major investment decisions. And that's it. All right, this update is over. I'm gonna talk to y'all later. If you've watched this video all the way through and listened to my rambling, you should type in the comments below the word, I'm looking at the news article here for Apple, so developer. Okay, write the word developer if you sat all the way through. I see you. Okay, that's it. I'll probably make another video on Thursday. Peace out.